Hey guys, John here. Welcome to my markets review series where we analyze Bitcoin, the S&P 500, and gold. Now, before we get started, I want to remind you guys that this video is brought to you by and sponsored by Prime XBT, where they offer leverage trading on all different types of assets, including the S&P 500, gold, currencies, and even Bitcoin. So go check them out, guys. And with that said, let's get started. Okay, well, first up is the chart that everybody is watching. Welcome to the monthly chart of Bitcoin. Guys, this monthly chart couldn't look any more bullish. And quite frankly, this is the most bullish I've ever seen Bitcoin going into 2021. So I expect fireworks, strap on, guys, and I think this is going to be a lot I think it's going to be more parabolic than 2017. I think this is going to be probably the most parabolic move and year that Bitcoin's ever going to experience. And I think that's solely due to the onboarding of institutional investors. That said, let's switch from the monthly chart. We do a top-down approach here. So we go to the weekly. And right off the bat, guys, I will tell you that if you ever find yourself flustered or a bit frustrated, take a step back, look at the weekly, and I guarantee you'll find more clarity in your position. So all of these levels that we've drawn here that you see on the chart are the most important levels on the chart, guaranteed. Okay, I don't like to fluff up my chart with a lot of stuff, but the stuff I draw on them really, really works. You can see that when we drew this resistance line when we were down here and we broke out, we touched the all-time highs, fell back. The same thing when we touched this, resistance level 2, fell back, and then bounced back. Same thing happened here. But the reason why this has significance is because obviously my next target was this 24,000, and we pretty much reached it. Okay, we came within $250 of this $24,000 level, and we started to see a rejection. So now all the institutions, all the hedge fund managers, everybody that's watching this, their first thought is, going to retest the breakout, right? That's your next support level, okay? And it's not too crazy because if you actually go and you see what that would mean only a 15% correction to the downside, guys. When in a bull market like this in 17, we're used to a 30% correction, which would put us down to that $16,000 support level, which was once resistance, right? I don't think we're going to get this. I don't think that we're going to see anything below 18,000, and quite frankly, I'd be surprised if we fell below 20,000 in my honest opinion. And the reason is because, redundantly, as I've said before, 2017 was a retail market, which is a lot more emotional. You had that 30% corrections. This is an institutional market that's coming into play with retail, okay? These guys do not buy for short term. In fact, they can't even get in and out of positions like we can, right? Second of all, they have taxes, right? They pay a capital gains tax on their positions, which you can imagine at 40% almost, is something they don't want to do. So when these guys buy, they've made a plan to hold for at least a year, okay? They've got stronger hands than we ever had. So I don't see these corrections being to the magnitude that they once were. So with that said, I don't see a 30% correction, at least coming here at the $24,000 resistance level that I put up before. Obviously, we're having some weakness here. We're having some selling. If I had to guess, this is institutional investors. This is retail investors, right? These are your crypto whales that are taking some profit, right? I myself saw $24,000, and I wondered if I was going to take profit here, but I'm not. I'm not a little profit. I'm not even going to take a little profit, guys. I'm in this move. I think that if you had bought below 20,000, you're sitting pretty. I'd be surprised if we ever see levels below $18,000 ever again, and let alone 20, in my opinion. So where does that leave us? We have a target to the downside now on the weekly, but now we need some targets to the upside, right? The exciting stuff. So let me bring this in here, and I'm about to show you my fibs, as Scott says, right? So first, let's go and retrace. Let me go make sure that magnet mode is on, and we'll fib this high point here to the low point. And what you'll see is we have confluence on this support resistance level, and we also have it right here. And these were one of the most important levels, right? Rejection, pull back up here, rejected all the way below the next support level. So this was very important, and so was this one, right? So let's get rid of these because they don't show us any upside targets, and let's fib a bigger move. Let's fib the move, which would be from the last all-time high in 17 down to that same low point, okay? And what we get here is absolutely more confluence, but we get our next level. Okay, moving on to gold, GLD. Guys, I'm going to go through gold and SPX a little bit quicker. I spent a little bit more time on Bitcoin, probably because I was very excited, rightfully so. So here we go. Here's the monthly chart of gold. I'm going to take you through this price action again. I believe that doing so just helps you put a better pulse on the market. I always do that for myself. You can see here the levels that we've drawn in the last previous videos. Again, this is the monthly chart, so bringing you through this. We've gone through this parabolic move here, with COVID happening and us printing unlimited dollars. We hit this resistance from the previous high over here, and we wicked up, but it wasn't enough. Lost the confidence. They took some profits right here, and that extended to a downtrend. Broke through this support right here, but it wasn't enough to touch this bottom level right here. So obviously they see this as good value, and we've had a up move this month. And then, yes, I had my buys from last, I think it was 2 or 3 weeks ago. I think I put that on Twitter. But let's move on to the weekly chart. You can see here again, taking you through the price action, we had that, nice parabolic move. Finally broke through the support, tried to make it above it, couldn't do so. That's when we lost confidence, gapped down, tested this support here. Tested it again, and just like here, once we couldn't have a good reaction over here, we lost confidence again and broke down in great fashion. But this is where I see we had a good sign of strength. So this shows us that the bigger guys are thinking that this is good value here, and again, this is where I got my long entry. I believe so. Yeah, it was right here, I believe, and it was on the sign of strength, right? I think it was like right here. And it was enough to just break through this next resistance level. So again, my next targets will be this 184 level. Now, I wouldn't be surprised if we have a little bit of consolidation here before we go ahead and attack it. Reason being is because normally when we break out like this in good fashion, if it is going to go to the next target, it normally does so in great fashion, especially once it's reached a value point, right? So I would look for some consolidation here, but I'm still bullish on gold. The bigger story, though, is I'd like to see it break through, the all-time highs here in good fashion. And it's probably going to do exactly what Bitcoin did, when it gets there. And I believe it will get there. We're, very... Fed's dovish. They're not going to stop printing money. The story's not going to go away. It's going to take a lot of work to recover from the economic damage that we've done, especially in the U.S. So I do see gold going higher, much, much higher. I view it as a long-term play, not a short-term trade. So if you're trying to trade gold short-term, I would look elsewhere. But long-term, I would definitely get a bag of gold and catch it on one of these, breaks of support, and then a break of the resistance. So if you're not in a move already, let's see. If you're not in a move already, I mean, you could buy this. You could buy this and then set your stop. I like to set my stops just below support, right? And you might get taken out on a wick, but most of the time, if you set it a good bit below support, you're going to be fine, right? And that's a good risk versus reward, and that's what trading and investing is about. It's finding that good risk versus reward, where if you take a loss, you don't lose too much money, but you're waiting for that move that makes up for all those small losses. And I think this would be a good risk versus reward. So yeah, guys, that's gold. There's nothing much to say about it. We're still waiting for us to break all-time highs, and that's when we'll start getting excited. That's probably where I will add to one of my positions. Probably on a very good breakout or a breakout and then a retest of this all-time high support. That's what I'm looking for over there. So let's move on to the SPX. Okay, we'll go to the monthly chart. And let's zoom in a little bit so we can see these candles. Okay, so I think it's pretty clear what the SPX, the stock market's trying to do. It's trying to, attack this target right here, and it's not even pulling back, guys. It broke out of this this resistance level and then gapped up. So that's exactly what it's trying to do. At the end of the year, this is normally the best performing time for stock markets, right? It's when everyone's buying, companies are making money, they're going on TV, on the Kramer show, and trying to brag about their earnings reports and all that kind of stuff, all that jazz, especially retail. So even though it's going to be a little bit weak this year, we still have the Fed, and everything just printing money. So this stock market's going to go up. I see this breaking this resistance. I mean, right now we aren't even seeing a pullback. So this is really strong, guys. Honestly, I'll tell you what, my target isn't even this one. I'm going for this 3972 is my target level in SPX. And this is my forte. This is my wheelhouse. This is where I play my stock option trades. That's what I see, guys. So again, I'm going to cut this video short. I hope that you enjoyed my markets review. Please catch me on my Twitter. You can find the link in the description below. And please, guys, subscribe to my YouTube channel if you like it. It lets me know that I'm doing a good job and that I should continue doing this. With that said, I wish everyone the best of luck. If you're playing Bitcoin, be careful. If you're playing stocks, just set your stops. And, I think the worst one of them is gold. I actually like stocks and Bitcoin right now over gold. So take care, everybody, and I will make another markets review. You can catch me next Thursday. Bye.